All right, good afternoon, everyone. Thank you for joining the aptly named Inside the Minds of Angel Investors with Seble, Tareke-Williams, and Sapna Shah. My name is Pialy, and I'm the Chief Strategy Officer at Republic, and I'll be moderating today's event. SheWorx is a member of the Republic family focused on bridging the gap between female founders and funders. We're a strong and growing network of women entrepreneurs who are shaping the future of tech and investing. A couple of housekeeping items. You're all on mute for the presentation portion of this section. If you have any questions or comments, please pop them into the Q&A section like Suzanne did. We are recording this event. The recording will be available in the coming weeks. And of course, I have a necessary disclaimer. This session is for educational and discussion purposes only. The views expressed during the webinar are those held by the individual participants and not necessarily their employers. Okay, I'm going to stop sharing my screen so you can see our participants here. Hi, ladies. Okay.
Hi.
One second. Great to see you guys.
Thank you. Glad to be here.
I actually wore lipstick for you ladies. This is the first time. It's the second time, I should say, since March that I actually wore lipstick.
I can relate.
So, okay, for the next 45 minutes, we'll be joined by two of my friends, Seble, Tareke-Williams, and Sapna Shah. They're both great humans. You guys are brilliant minds, angel investors, and passionate about funding women-led startups. I want to make sure the questions are tactical and actionable for those in the audience. So thank you both for joining us. I have questions for each of you. They're mostly sourced by the audience, but I want to keep this a conversation, so feel free to add to any questions. Let's start with your backgrounds because there are founders in the audience who obviously want to meet angel investors and learn more about you, but there's also angels or people who want to be angels and want to hear about your career path. So Sapna, why don't we start with you? You and I were introduced by Tracy Chadwell, who's a wonderful venture investor at 1843 Capital. Can you tell us a bit about yourself and your background? How did you go from working in finance and retail strategy to becoming solely an angel investor as a career?
Yes, for sure. Well, first, just thank you so much. I'm so happy to be here and really looking forward to this conversation. So thank you for having me. Tracy is lovely. I'm so glad she introduced us. I started my career in investment banking, as you mentioned, hated it, and was kind of looking for my new thing. And I ended up in retail and fell in love with it. And so I worked at big companies like Gap and Ann Taylor and Linens and Things, and then transitioned to being an entrepreneur. So I had two different companies. One was an equity research kind of boutique firm that focused on the public retailers. And the second was an e-commerce startup. And I got to the point where I loved being in the startup ecosystem. I really loved being an entrepreneur, being my own boss, but I had a transition point in both companies. They were sort of running simultaneously. That's a story for another day. And really didn't know what I wanted to do next. Thought about joining a startup, ended up investing in a friend's company, actually a retail tech company, and thought, you know what? This is a really great path. It's a great way to kind of combine this strategic headset that I had from my strategy roles, seeing the landscape of what was happening in the startup community and still participating, but on this, on the other side of the table. And that was 7 years ago and I haven't looked back.
That's awesome. Seble, so I've known you for almost 2 decades now. Seble and I were in the same study group, and her brilliance got me some really good scoring points in class. Seble, kind of same question for you and your background. How did you go from roles in real estate to angel investing? And I know you're still in real estate. Would also love to know a little bit about your investment thesis.
Yeah, sure. Yeah. So Thank you for having me. I'm really excited to be here. And I was fortunate 20 years ago, I'm dating myself. Pialy came up and introduced
Wait,
herself.
17 years ago.
17, yes. Let me not round up. No rounding up. She introduced, she's one of the first people who introduced herself to me in grad school. So I'm thankful for that. I'm glad that we've remained friends for so long. So I had a couple of reasons why I entered angel investing. As you said, my background's in commercial real estate. And historically, that industry has been a laggard in innovation. I'm glad that it's changing in recent years. But at the time when I started, maybe 4 or 5 years ago, it had a ways to go. And I really felt that I wanted to be exposed to new ideas, just innovation trends. And at a very fundamental level, real estate is about how do you optimize the utilization of space. And that's impacted by innovation, right? So I saw that there could be a benefit professionally. And then personally, I really wanted, and even in a small way, to be helpful to under-resourced entrepreneurs, particularly women-led firms and firms led by people of color. So I began sharing with friends what my interest was, and a few friends made recommendations to me of clubs I should join, angel groups. And that was a great way for me to enter angel investing. We can talk a little bit more about my experience in angel groups specifically.
Yeah, why don't we do that? I know that you have a few direct investments predominantly through angel groups, right? Such as most of your investments are through Pipeline Angels, HBS Angels, or angel funds like Portfolio. I think it would be helpful to level set and let people know what the difference between, Sapna's approach is to go direct and versus going through an angel investing group.
Yeah. So an angel group was an ideal fit for me as an investor. I really wanted to invest alongside co-investors that had similar investment objectives, but I also wanted to benefit from diverse perspectives and insights because, even as a Black woman, I have my own unconscious biases, right? I really wanted to benefit from other people's insights. And I just like that sort of group process. Also, I wanted to invest at a financial level that was comfortable to me. And so in investing through an angel group, you naturally are able to leverage the dollars of your co-investors. And I think as we're trying to broaden the funding base for startups, that angel groups are a great platform to ensure that. And so I, like you said, joined a number of groups, and Pipeline and Portfolio, HBS, Angel Alumni Group have all been great conduits for me for investing.
Sapna, I just want to see if you had anything to add there.
Yeah, I mean, I couldn't agree more. I think it really depends on what you're looking for out of your angel experience. And I was a member of a group for a while as well. And I focus on the future of retail. I'm so specific that kind of having that broader generalist perspective of an angel group is not that helpful to me personally. So I now invest only on my own.
So, COVID, the big elephant in the room, it's accelerated a lot of consumer behaviors, or maybe decelerated other ones. Has that changed the way you think about your investments, especially in retail?
It's made them more exciting, to be honest, particularly on the retail tech side. So I invest both on the tech side of retail as well as digitally native brands and marketplaces. And, we'd seen this huge growth in brands and marketplaces even before COVID. But the retail tech side had kind of lagged. And if you think about an e-commerce experience, if you go shop on your favorite e-commerce website, particularly from desktop, that hasn't changed in, I don't know, 25 years. So there was a lot of innovation missing. And I've always said that e-commerce is boring and it's not fun shopping. It's great for like, if you need this kind of light bulb, but it's not like, let me go see what's out there. That's not what e-commerce is for. But I think COVID has really accelerated consumers' expectations of what e-commerce should be. And now I think we're starting to see a lot of, young startups in the space of making that experience better. And whether that's through AR and VR, through personalization, through fit technology, there's so many exciting things happen. And I think COVID has really accelerated those things, and those needs, and for brands and retailers to improve their experience. So I'm excited to see what's next, particularly on the retail tech side.
It's interesting because I'm excited to be co-investors with you at Republic on Visuals, which is a great company.
Absolutely. And that's a great example of a company that's kind of turning commerce around, and COVID's really been a pivot for them. And they're doing a contactless commerce model in vacant storefronts, which, is so exciting, and so the wave of the future. And if you don't want to go walk into a bricks and mortar store and you could just, buy through the window, like how amazing is that?
It's so amazing. It's interesting. So now we have a bit of your investment thesis, so thank you. But how do you meet companies like a Visuals? So we met Visuals through the XRC Labs, which I'm a mentor to. And we've gotten a lot of these questions. So how does someone, Seble, how does someone find you, or not even you, just find someone who's a good fit for them as an angel? And especially in this context of this new normal worlds that we're living in, where everything's virtual, this event is virtual. How do people founders find angel investors?
Yeah, that's a good question. I think we've all seen that in these unprecedented, challenging times, that individuals and organizations have been super creative on carrying out their missions, right? And so I have found that a number of angel clubs, if they weren't hosting their monthly pitch sessions virtually pre-COVID, they are now. And a number of them are finding that actually attendance at pitch events actually have gone up. Because it's just easier, right? It's accessible. Yeah. People are busy. And so, oftentimes it would be like around dinner time for me, right? So attending pitch sessions are a lot easier. And so the Angel Capital Association is the national trade group for angel investors. They have a great website in terms of resources, both for angel investors as well as founders. And under their About section, I'm being as specific and actionable as I can be. Under the About section, there is a directory of angel groups, and they have it organized by region and also by, the most active investing states, New York and California. And so you can reach directly out to angel groups. I also find that pitch competitions are a great way to get in front of people. It's a great way to practice your pitch. And during COVID, for example, I served as a judge for Women Who Tech. And so even if a company was not selected, I had eyes on someone's application, right? And I can always choose to go directly to that business. And a lot of these pitch competitions, and you could just Google, there's a lot of them out there, and there's a number focused on underrepresented founders. If you're not selected, I find that a number of these competitions are good about giving feedback about why you weren't selected. So I just think getting yourself out there is important. I'll be honest, I do get contacted via LinkedIn. That doesn't really work for me, but may work for others. So I don't want to say don't do that. But there's platforms like Gus that you may want to, post your profile on. Again, that has not been a route for me, but maybe for others. But a general piece of advice I would get, what I would share is, I think founders should always allocate a portion of their week to outreach, because one discussion will always lead, well, not always, but often lead to another discussion. And you want to be doing that even when you're not fundraising, right? Because there's lead time that is inherently built into fundraising. And so, there have been a couple of companies where I literally was just receiving their monthly or quarterly updates. And by the time, even one company for a year, and when she was ready to raise, I was like first one in line, because I was able to track just her approach to building out her business, the growth that she experienced over that year. So I would say, don't wait until you need the money, just constantly have those conversations.
If LinkedIn doesn't work, then Sapna, is there something that works for you? And specifically, what medium works and what should they say in this cold outreach to you?
Yeah, so I think cold outreach can be tricky. You can't do it as a MailChimp email that's not customized and blast 500 investors. Don't do that. Please don't do that. But if you make it custom, all my stuff is out there. If you go to my website, it tells you my portfolio, my investment thesis, kind of all my blog posts. So you know what I'm thinking of and what kinds of things I'm looking for. And if you've customized your email and say, I've looked at your website, I think we're a fit. Here are the reasons why. Here's a deck and a little blurb about my company and a link to my LinkedIn or whatever. Those are great cold emails. And I 100% agree with LinkedIn does not work for me. I like it to all be in my email box. I can't track LinkedIn in the same way. And I think, you can generally find angel investors' emails. So feel free to do cold outreach, but make it count. That poor cold outreach is things like, I get this all the time. Dear Mr. Shah. I'm like, there is a picture of me on my website. I really, that you have clearly done no homework, right? Or I get, pitches for like cybersecurity companies. I'm like, again, you did not look at what I'm focused on. So, do a little bit of homework. It goes a long way. And I just wanted to add as well to Seble's, places to find angel investors. I actually recently wrote, not that recently, sometime during COVID, wrote a blog post about how to find angel investors. It's the top one on my website. So not to like kind of plug it, but I am going to plug it because there's a lot of different ways. I didn't even have some of the ways that Seble said. So I would say there's a lot of different ways and really keep that outreach as broad as possible.
Awesome.
And I have to say, Sapna, I've looked at your website. It is like full of resources. I was so impressed. So I'm recommending folks visit your site. Red Giraffe, right?
redgiraffeadvisors.com. Thank you.
Yay. Before we move on, I want to address a question from the audience. And Gwenadi asked if, I guess this is for you, Seble, do you need to be an accredited investor to invest through an angel group? And are there any investment minimums that you need to have compared to, equity crowdfunding at Republic? Some of our deals, you can invest with as little as $10 and not be accredited.
Yeah, so the angel groups that I'm affiliated with, yes, you do have to be an accredited investor, but there I feel like, the platforms for investing in companies and not having that requirement is really growing. And even I think platforms that traditionally have had that requirement is adding like a pool of invested for non-accredited investors. So it's a mix out there. And there's a range of, a more traditional older and angel club could have higher minimums of, $25,000. But even some groups that are recognizing the need to expand accessibility for angel investors have cut those requirements in half to 12.5. And then there's some groups like Pipeline where it is $5,000 minimum and you just invest at a level that you feel comfortable. So there's some people who have invested 5 times that because they had the conviction and around a particular company and the capability. So I feel that there's a pretty broad spectrum if you want to be involved.
Awesome. Okay, I want to move on. So now you've sourced the deal. The founder was able to get to you, got the intro. Now that they've set the meeting. How should the meeting flow? We get this question all the time. Should a founder walk through a deck? Should they keep it casual and high level? Sapna, can you address that?
Yeah, usually I would say it's whatever you as the founder feel comfortable with. Some founders really just feel comfortable walking through the deck to start with, especially if this is maybe their first meeting with an investor. You kind of want to stay on track. You don't know what to expect. But typically in the meeting, most of the meetings I have, the founder has sent me the deck in advance and I have looked at it. So we end up having a much more kind of high level conversation. And usually I have some questions that I want to ask, or they have questions for me
Mhm.
as well. And just becomes a conversation. So, but it's really kind of what you're comfortable with as a founder. I'm fine either way. I don't mind it.
Seble, do you have a preference?
No, very similar. I think that when you become too scripted, then sometimes you're not as responsive to questions that may come up, right? So you're so wedded to your script. So
Yeah.
I think if you sent your deck in advance, I think it might be a waste of an opportunity for someone to really get to know you beyond the deck.
So what are some major don'ts when they actually do meet with you?
So honestly, I don't have rules to this. I actually think that kind of the rules and norms are part of the access problem, right? If you feel like you got to be a certain way.
Yeah.
I think at a very basic level, don't be dishonest, don't be unauthentic. That those sort of things catch up to you. And so I don't necessarily have rules. I think it's you know, just fundamentally be yourself and be prepared. Know who you're sitting with, like Sapna said earlier, and just do your research.
So now you've met with the founders. There is a founder that you want to learn more about. So now let's take it to the diligence phase. What influences your decision as to whether you invest or not? Are there specific metrics you track? Do you follow other investors? I'd love for both of you to answer this, and maybe Sapna, you go first.
Sure. So since I invest in a specific industry, which I know hopefully a lot about, I don't necessarily start with like market diligence. I start with the founder diligence. So, and what I mean by that is having multiple meetings with the founder, understanding the way they think. And I do that in a couple of ways. One is kind of walking through kind of competitive dynamics of the space, what the product vision and roadmap looks like, whether it's a tech product or a physical product. And I spend a lot of time, I was an investment banker, so I spend a lot of time on financial assumptions and kind of how those assumptions drive your business. And I expect to see a financial model. Doesn't have to be 5 years out, but it does have to go out a couple of years. So I do look at that and and I'm mostly trying to figure out how the founder thinks about these things, because again, since I'm investing at pre-seed, sometimes investing pre-product, pre-revenue, there aren't a lot of metrics to look at. And so what I'm really trying to figure out is, how do you think about growing the business? How do you think about capturing market share? And all of those kind of diligence pieces are really about that. If there's a particular sector that is kind of underrepresented or maybe is really small right now but is growing, I might dig in more onto the market there as well, and kind of size of market. But that's usually not something I spend a lot of time on, which I think is different than a lot of angels.
Yeah, I agree with that. And I think really what draws you in initially is the founder, right? You're really looking for extraordinary leadership capabilities and some traction in being successful in the concept that they're putting forth. So it's really trying to understand just the founder, getting excited about the founder. And we'll talk a little bit more about the pieces of diligence. But I think that's number one. And also, is there really a market, a sizable market? Is it, is beyond would I buy it, right? But will millions of other people buy it? So just trying to understand kind of, is this a sizable enough opportunity where you can scale it in a meaningful way?
So let's talk about that in terms of the data room. What type of data do you expect to see? Does a founder need to have a cap table? Sapna addressed having a financial plan. What do you expect to see?
Yeah, so love this question. So I want to talk about sort of the specifics of a data room. I love a data room. So for folks that were not familiar, but it's really a place where you have documents that allow you to validate your pitch deck, right? And it allows an investor to sort of connect all the dots of the success factors of your idea. So it's where hopefully you have some organized folders that kind of split up different areas of your company. So you'll have a folder for corporate formation, like, are you a real company? Anything, you'll have a folder for like litigation that shows, there's no open litigation, there's no history of litigation, or it's been resolved. You'll have insurance certificates, sort of those formal documents. And then you'll have folders for market and market sizing. It'd be wonderful if you're claiming a $1 billion total addressable market, that you're showing how you got there and you're sourcing it, because the more information you can provide in the data room, the more efficient the process will be in terms of someone making a yes or no decision, and less sort of, going back and forth. So sizing the market, being clear about what the product is. So anything around intellectual property, also just what your go-to-market strategy is, a folder for your team, bios for your senior team as well, or just yourself and, a partner, or if it's not a big team, your advisors, like who's there supporting you. In terms of financials, I agree. If you're an early stage company, you're not going to really have historicals. You might have a current balance sheet. It'll be nice to know what you're working with today. And then financials, honestly, as an investor, I'm not relying on your 3 to 5 year projections. They're just way too many uncertain variables. But what it does show me is what your revenue model is, right? How are you pricing your product? And what is it going to take in terms of resources for you to reach your targets, right? So it shows that you have really thought through all of this. And so creating these documents shouldn't be solely for the purpose of the investor. You creating these documents should be useful to you in terms of you planning out how you're going to succeed, right? It's just you're putting them in an organized way. Because, I think as an investor, and many investors feel this way, you don't want to be a distraction to the founder, right? Raising money is often, especially for women, it is a distraction to operating and growing your business. So create these documents for yourself and share them with your investors. That's the way I see it. And then in terms of sales, anything you can provide around, current customers, sales pipeline, anything that kind of validates your traction. Mm-hmm. And then product, a roadmap, your product development roadmap is helpful. One founder, she just had an incredible data room, and she included responses to customer surveys. And I literally could look at her customer surveys and then look at her product development map and connect the dots and see that she was being responsive to feedback that she was getting from customers, early customers, right? So all of that is super helpful.
That was amazing. This is why I wanted you in my study group too, Seble.
I'm in a study group.
Sapna, do you have anything to add? And I kind of want to hear about specifically a cap table, because we've gotten a lot of questions as to like how necessary is a cap table at this stage?
I mean, I would say, investors are going to want to see the cap table. If you've got the data room set up, which I will say that many founders I see don't have it yet. But once you do, the cap table and even the documents, if you're using a note or a safe or whatever, that you might have put together already, or have a lead, or have an investor who's worked on those with you, putting them there up front is really important. I have actually not invested in a deal that we went all the way through diligence because I had not seen the cap table and I wasn't getting it. And then when I got it, it was just a mess. And it's unfortunate because the founder also wasted a lot of time, talking to me and going through diligence. And then it was something that could have really easily been sorted out up front, where we could have said, here are some of the issues that you might want to fix within this round, or or it's not going to be a fit for me. So I think for a lot of reasons, it's really helpful to have that cap table in there, and really show your investors that your potential investors that you've got it all buttoned up, you're ready to go.
Yeah. So let's move on into thinking about the terms, and what terms are most important to you and why? And I'll actually throw in Suzanne's question. So Suzanne's the founder of Private Packs, and she asked the first question, and it was, what is one term on the term sheet you wish founders would negotiate upon?
That's a good question, and I can't think offhand. I do.
Why don't we start with what's most important to you guys and why? Is it like valuation, pro rata rights, information rights, most favored nation? What's most important to you?
Pro rata and information rights, for sure. I do feel like if you're investing in a company that you should have access to information, and when folks make a big deal about it, I have questions. But pro rata, I want to be able to, if I choose not to be diluted in a future round, I should have that opportunity. And valuation is tough. I mean, it's a bit of an art and a science. I mean, either you're way out there, right? Or you're kind of, it's okay, maybe not perfect, but when you're dealing with early stage, it could be difficult. So it's important, but it's a little bit of an art and a science. You want to be within a certain range for early stage.
What about you, Sapna?
Yeah, I completely agree on pro rata and information rights. I think, if you're investing pro rata, it feels like it's a must have for, and I always try to make sure if it's not in the documents that I get a side letter. Because if I do want to, be involved with companies and I do want to invest again and follow on rounds. So completely agree there. And yeah, on valuation, I think the big thing that I look for in terms on valuation, particularly at pre-seed, is that your valuation isn't too high, especially if you're planning on raising again, because if it is too high and you have to raise again and you maybe haven't quite hit the milestones that you were going to, you're going to end up doing a down round, or it's going to be some bad signaling, or you're not going to be able to find investors for the next round. And so, while it's a negotiation for founders to negotiate valuation, it's like, do you have, as you're talking to your lead investor or your investors, how much power do you really have in that relationship at the earliest possible stages? Probably not that much. And you, of course, as a founder, want a higher valuation. It's just really tough. You have to think ahead and think to the next round and say, okay, if I'm doing a pre-seed at what would normally be seed valuation, how am I ever going to raise a seed round? I'm going to have a Series A metrics in my next round. And is that really possible with the amount of money I'm raising? So I think that's where, valuation can get really tricky in the early stages, but I completely agree that, it's sort of a range, and you just, if you're too high, it's a real issue. If you're too low, you're also probably diluting yourself too much, and that's probably bad too. So
yeah,
all of those are important.
Yeah, and one thing I would add for the folks attending that are interested in being angel investors that are not founders, you have to understand your positioning as an angel investor. If you're coming in and there's only a few dollars left to raise, you're not a lead, you have to understand you don't have that much leverage, right? And you need to accept what's already been agreed to, and don't be a distraction. Either you want to do the deal or not. And if you can get a side letter, I think that's a very, sweet way to deal with these sort of rights. But you really, as an angel investor, have to understand your positioning in the round and the leverage that you have. And related to that, I think it's important for a founder to communicate their timing needs. Especially, well, I was going to say, especially when you're dealing with an angel group, but I think with anyone, I think you need to be clear what your timing needs are. And also related to that, I wanted to mention earlier about investing with angel groups, because I didn't want people to be confused, is when you're investing with an angel group, you're not communicating with 10 people, you'll have one representative that is a diligence lead, and that there should only be one person that you have to communicate to during diligence. And often that will be the same person that you will also communicate post-closing. So.
We got a question from the audience from Ashwin. I think this is from an angel investor investing point of view. What should we look for specifically on terms about convertible notes?
So it would be, what are the terms? When would a note convert, right? And what the valuation caps are. I guess that would be the two major items.
Yeah,
there's a discount rate.
Discount rate as well. Yes.
Yeah, and I think the question, and this actually goes back to Suzanne's question of the thing that you should negotiate. Maybe this isn't really a negotiation term, whether you're a founder or an angel. It doesn't matter which side of the note or safe that you're on. This is the other reason why the pro forma cap table is so important. You really need to understand who is being diluted when things convert. This becomes more interesting when you've got a safe from an accelerator, and then you raised on a node, and then you did a bridge on another node, and then it all converts into one round in the seed. So the thing maybe to answer Suzanne's question and Ashwin's is, I think you really want to make sure that you understand, you as either the founder or the investor, understand how everything converts and who will own what once there is a priced round. Your attorney can very much help you with this. In fact, you should ask them to help you with this, because there are so many times where people don't understand exactly how things are converting and how they're going to layer. And, founders get upset because they don't own as much of the company as they thought they would. And investors get upset because they didn't think they were being diluted by the next round. And yet they, the next note, and yet they were. So it's something that perhaps isn't quite a negotiation in the beginning, but it's a general agreement, and we all understand how this is going to convert.
Awesome, thank you. So we got a lot of questions, so I thought it'd be great and fun to have a quick lightning round so we can answer as many questions as possible. These don't have to be too in-depth. So Sapna, let's start with you. What percentage of your portfolio companies are led by women?
70% led by women, 90% by underrepresented founders.
Awesome. Seble, how many founders do you meet versus cut a check-in?
Yeah, given my angel group approach, dozens, probably hundreds to one, and 100% women founders in my portfolio.
Awesome. Sapna, you've said no, come back when you have traction. Do you really want to be kept in the loop via quarterly email updates, or is this your way of saying, or not yours, or an angel's way of saying, pass, we're never going to invest?
I love being kept in the loop. I love those emails. I love being on them. I like keeping track. There is always a chance I'll come back and invest, but also that I might ask you to speak at an event or refer you to other investors if you're kind of past the pre-seed stage at some point. So I mean it when I say it.
Awesome. Seble, do you have a preference, a non-downloadable doc send or a PDF when a founder shares a deck with you?
PDF is definitely easier, but I understand why a founder would want to use DocuSend, and so I'm not adverse to it. I want to be founder friendly.
Awesome. Sapna, we're noticing a lot of companies leveraging Notion for data rooms versus Google Drive or Dropbox. Are you a fan? What do you prefer?
I'll be very honest, at the pre-seed, I have not seen a Notion data room, but I don't see a lot of data rooms. So maybe I'll just turn this around and say, early stage founders, make sure you have a data room. Any platform, I don't mind which one it is.
All right. Seble, would you consider rev share or venture debt?
I would. I have not done it in the past, but I'm definitely open to non-traditional investing models, and want to make the note that not every company is destined to be a unicorn and won't be, right? And a founder, there are founders out there that will be solid companies but they're not going to be like a traditional VC home run. And so they may not be the right fit for VC. And so I think I'm open to it. I actually, want to learn more about it. And I think in terms of just having the funding landscape be more accessible to diverse funders and founders, that it's more than just, who has a seat at the table, but it's also about what's getting done at the table, right? You have to be open to alternative ways of investing.
Awesome. Sapna, a solo founder comes to you. Is that a red flag?
No, I invest in solo founders all the time. It is harder to raise, and you do need to make sure you're really good at hiring and get a good team together, but it is 100% doable.
Seble, what's one question you wish founders would ask you?
I don't have a specific one. I would say it would be the question that's most important to them that they may feel uncomfortable asking. I would want them to ask it. As long as it wasn't offensive, I would want them to ask that question.
Sapna, same question to you. What's one question you wish founders would ask you?
I wish founders would ask, like, if you invest in my company, how will we work together in the future? How involved do you want to be? How can you help me? How often do you want to be updated? Very few founders ask this.
So I'm going to turn this question around to you then, Sapna. How involved are you in your portfolio companies? And do you want to get pulled in, or do you reach out, when you're available?
I love being involved. The earlier they are and sort of the more recent my investment is, I'm more involved. I also love getting pulled in when there's a particular issue that I can help solve or make an intro. I would say when they get kind of to Series B and beyond, I'm not that involved anymore. There's plenty of other seats at the table that can probably help them in that growth mode. But in the early ones, for sure, I'm very involved in it, and it works both ways. I'll reach out and they will also reach out to me.
Last question, Seble. Should founders have an answer to the question, what's your exit at such an early stage?
Yeah, I mean, I would find, yes, I think the short is yes. There has to be an alignment, right? How are people going to get their money back and more, ideally, but they're not going to know exactly, right? But if folks can highlight in a merger and acquisition, what's a pool of companies that would make sense, I think that shows some degree of thoughtfulness and understanding of the landscape, and so that definitely is helpful. And I just want to mention earlier about information. It is extremely helpful for a founder to send quarterly updates. Monthly is probably too much. And there's some founders that do it 2 or 3 times a year, which I think is fine as well, as long as it's consistent. It is a great way for an angel investor to kind of pinpoint where can I be most useful, right? I see that you're doing this. Oh, I have a connection there. Let me be helpful. And then, a number of founders have kind of the template of, these are my metrics, how I'm performing on my KPIs. And then they'll say, here are my asks, right? And it's usually, I need to hire X, Y, and Z, or I need an introduction here or there. It's just a really great way, to communicate with your investors and pull the resources from them.
We only have a minute left, so and a few more questions. I'm going to try to get as many in. So Mateo asks, how do you evaluate startups that don't typically have signals for proof of success, such as just a prototype?
I mean, I can answer that. I think even if you don't have a product, you have a hypothesis on who your customer is, whether that's a tech product, a physical product, a service, and you've probably done some customer research. If you haven't, you should be doing that right now. But that customer research are the findings that you've gotten from your customer insight. It's not traction, but it certainly gives the signals of where this is going and do you understand who that customer is?
Awesome. All right, ladies, we have more questions, but we're at time. Thank you so much for giving us these last 45 minutes. I love that you kept it tactical, exactly what we want, and answer these questions for our founders. So thank you so much for being here. And I hope you guys have a wonderful holiday. I hope I get to see you in person soon.
Thank you. It's a pleasure.